2024 has been an absolute roller coaster for the prop firm industry, with unfortunately a whole bunch of firms going out of business, and the entire mood of traders has dropped faster than traders' mood after a bad NFP report. And in today's video, we're going to discuss how to navigate this and how to pick a prop firm challenge, because not only is the industry kind of chaotic right now, but there's also a ton of options out there, from 1-stage, 2-stage, 3-stage challenges. How can you possibly know as a trader what is going to help you get funded? What's going to be the easiest challenge to pass? Well, thankfully, that's why we're making this video, and that's what we're going to discuss today. But first, there are two disclaimers that we need to make. First off, another prop firm probably won't tell you this, but you should not sign up for a challenge until you are consistent, until you are profitable. So that's the first thing. If you are not yet there, again, this is good information. Watch all the way through to the end of the video. Second disclaimer, this is by no means just an ad for Lark Funding. Yes, we have been operating for over 2 years. Yes, we believe very strongly in our service. We have been reliably processing payouts for over 2 years. But again, this is not just a sale for us. I have always said that I believe competition makes everyone better. And as a trader, your goal should be to get as much funding as possible with as many firms, as many reliable firms as possible. Very, very quick break to tell you about our school community. Do you want to get over $4,000 of trading courses for free? No gimmick, nothing whatsoever. It's completely free. Everything that I learned and did to become a full-time trader back in 2021 are in these courses. I am in the group. You can connect with other traders. It's going to be a fantastic community, and we're almost at 1,000 traders already, completely free. You can join down below. Hope to see you there. Bringing it back to the first part, we need to determine what are the bad apples, what are the red flags when it comes to the prop industry, so that you can avoid these. So in a recent Lark Digest email, we outlined a whole bunch of these prop firm red flags. The first one being insanely low prices. We have seen this time and time and time again. If 2024 has taught us one thing, it's that the race to the bottom on price had disastrous consequences. So if you're seeing a firm offer prices that are way below industry standard, we're talking $100,000 challenge for $200 flag. Yeah, it feels great from the trader's perspective, but again, it's about quality, not quantity, because who cares what the price is if your payout will not be on it. Huge discounts on a regular basis, regular 50% plus discounts could be a red flag. Again, we very often run discounts at Lark Funding, but we're not running 50% plus discounts, 10%, 15%. So something to keep in mind. Third one is new kids on the block. Lark, we were once the new kids on the block. However, 2022 was a very different time for this industry than it is now. There's nothing wrong with being a new firm, but as a trader, speaking as a trader myself, I'd be very cautious to join a new firm. Again, 2024 has taught us this. How many influencers have started a new firm that went under rather quickly? Unfortunately, quite a bit. If there's a new company that's offering something very exciting, very enticing, fantastic, more power to them. But as a trader, you might want to wait at minimum, I would say, minimum 6 months to see how things go. It really doesn't take a lot of investigative work to find out if a firm is having payout problems, whether that's their Discord, whether that's social media, whether that's Trustpilot. Now, again, firms are cracking down on gambling behavior, so you need to take every rejection with a grain of salt, because there's always two sides to the story. There could be a clear breach of rules. There could be something going on nefarious. But again, if there's a theme, you're looking for a pattern of payout denials, payout rejections, that obviously is a red flag. The next one is Twitter drama. At Lark, we really try and always adopt a professional mindset, and the number of companies and number of owners that get into fights on Twitter just seems a little bit ridiculous. Next up is bad Trustpilot reviews. Again, Trustpilot doesn't always get the best reputation. They're known to remove positive reviews but take out negative reviews. So take Trustpilot with a grain of salt, but again, it brings us back to a previous point of seeing what the vibe is, seeing what the overall theme is with a specific firm. And the last one, the last red flag that you probably want to pay attention to is easy challenges. We are talking about challenges that are way easier than any other firm. Perhaps on a phase 2 challenge, phase 1 target would be 7% with 12% maximum drawdown. We've seen this time and time again. Firms that gain a lot of market share because they enter the market with really generous rules, but then again, they close down, they're not sustainable. So those are at a high level some of the red flags that come to mind, some of the bad apples that you want to watch out for. Now really the question is, well, okay, if you know this, then how do you pick a challenge? How do you know who to go with? Well, in the wise words of Charlie Munger, inverse. always inversed. So rather than giving you a brand new list of things you should look out for, all you need to do is inverse the list that we just spoke about. So insanely low prices, well, you should look for the inverse of that, which would be not insanely high prices, but reasonable prices. Prices that don't raise a red flag. Prices that suggest quality and a certain level of premium to them. Easy challenges, the inverse would be hard challenges. Now again, they don't have to be hard. I mean, all challenges are kind of hard, but reasonable challenges. Challenges that are in line with the industry standard. Now, that is the inverse, which I think is very, very useful. But this last part of easy challenges brings us to the next part of the video. We want to talk about briefly how to determine what challenge to take. We're no longer talking about what company to go with, but a 1-stage, 2-stage, or 3-stage challenge, because there's a lot of options out there. Determining what challenge to go with could be the difference between you passing and failing. It shouldn't be, but it could be. So, starting off with our 1-stage challenge with a gain target of 10% and a maximum drawdown level of 6%. Really, the 1-stage challenge is the ultimate simplicity. It is so simple. You know what your drawdown level is, you know what your profit target is, and you're just working towards that. It's incredibly simple. The 2-stage model is interesting because the maximum drawdown level is 10%. Now you have to make 8% in phase 1 and then 5% in phase 2. But again, you have a lot more breathing room. And so I think that's really why the 2-stage model is the industry standard, why it's the most popular. Now the 3-stage model does need to be discussed because it's very interesting. I said this wasn't going to be a video selling Lark Funding, but what I will say is I have not seen another 3-stage challenge on the market that is even remotely worth taking, except for ours, and I will explain why. Number one, the gain targets, the profit targets are 5%, 4%, and 3%, meaning it's only going to get easier, and you shouldn't discount that from an emotional standpoint. The fact that once you pass phase 1, it's only going to get easier as you progress. I think there's a lot of value to it. Number 2, there's weekly payouts, which is great. But number 3 as well is there's no daily loss limit. And I don't think traders have fully realized the potential of not having a daily loss limit. So while the maximum drawdown level is tighter at a static 5% drawdown, it's only going to increase over time as you progress. It will get easier and easier as you grow the account. And I don't think the trading community has yet fully realized the power of not having that daily loss limit. So it's certainly something to keep in mind. I think really ultimately what it comes down to, and the point that I'm trying to get to, is it comes down to your comfort level and your amount of experience. The more experienced you are, the more you can afford to have tighter drawdown levels. Overall, 2024 has been an absolutely crazy year for the prop industry, but at Lark Funding, we are going strong. I would love to know if there's something that I missed in this video. Is there a type of red flag that we didn't look at? Is there something in terms of determining what type of challenge to take that we missed? Let us know down below. And again, we have a brand new school community, over $4,000 worth of courses that you can join down below. It's completely free. As always, we will see you in the next one. And until then, peace.